please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
And we are also celebrating the mutual fund day. So we have S Naren now joining us, CIO and ED, of course, at ICICI Prudential Mutual Fund. Naren, good morning. Thanks a lot for joining us. Of course, you have been a channel's friend for last many years. So thanks a lot for that. Your thoughts on what's happened of late? I think last time when you were here, you told us, you warned us that the time is right to maybe shift to hybrid funds and not pure equity funds.
Yeah, first let me wish CNBC and its viewers a very happy 18th anniversary. I've been in equities for the last 28 years, and I think clearly there is a pre-CNBC era and post-CNBC era, and I remember the period in 90s when things used to be very different. So I must compliment CNBC for changing the entire complexion of the stock market. So from a market point of view, we have believed that while the market is not in end cycle, the valuations and sentiment indicators were no longer very attractive. And from that point of view, we would want more volatility, and luckily there has been about a volatility in the recent past. And what was very interesting to me is that the 6-month return in Nifty is just 4%. And if you asked most people in the market, they would tell you that the 6-month return should be double-digit. So while the feeling is that of a bull market, the last 6 months large cap index return is not in commensurate with the mood of the market.
Good morning, Naren, and thank you very much for that very generous praise. It's a daily responsibility, and we hope we live up to it every minute. But just to come back to the point you were raising, that, we touched 10,000, I think, on July 26th. And if you look at it from that point, clearly not too much of gains have been notched up. But at this moment, where would you enter then? Is it a churn? Is it, say, a movement from NBFCs to public sector banks or something like that that you recommend?
See, if I look at it from a scheme point of view, we have always been in favor of categories like balanced advantage fund for quite some time now. From a capitalization point of view, we have always believed in large caps, but as you know, the last 1.5 years, while we have believed in large caps over mid cap and small cap, continuously mid and small caps have been outperforming large caps. So that's the reality, and I would still tend to believe that when the cycle for earnings improve, I think large caps have a much bigger way to go. And part of the reason for mid caps doing well is that while the local investors have been very, very exuberant, the foreign investors have hardly been exuberant in 2017. If you look at flows in 2017, they are very, very small compared to what we used to see in 2010 to 13. So we still believe in large caps, and we still think that if people have to invest for the long term, you either choose a category like balanced advantage fund or a theme like large caps at this point of time. This has been a consistent view. And I would say while the volatility part has been working recently, I don't think the large cap versus mid cap and small cap has been.
Okay. Naren, hi, this is Sonia here. I wanted your views on debt as well, because I was just reading one of your recent interviews where you said that you're quite worried about how investors are only looking at equities and as though there's no other asset class to invest into. Would that mean that you would recommend investing in debt funds as well in 2018?
See, clearly what worries me at this point of time is that having been in equities for 28 years, I have seen downs in the market. 80% of mutual fund investors have not seen a 10% correction in equities. So they consequently think that equities is an asset class will either give you +10 or +7 or +4. Because they have not seen 2011 or 2008 or earlier bear markets. So my thesis has been that investors should not invest in debt for the sake of debt returns. I don't think there is a big return expected from debt funds if you invest today. But there is a necessity to invest in debt because it is certainly a much more capital protection product compared to equity. And the reason for investing in debt funds is not return but capital protection, because you're not likely to see minus 10 or minus 15 in debt. So what happens is at the most you will get lower returns but not negative returns over medium periods of time. So what we've been trying to tell people, you either invest in equity and debt funds together individually, or you invest in a category like balanced advantage fund, because debt doesn't appear bubblish. In fact, no one is interested in debt funds at this point of time, whereas in equity the kind of flows, as most of you know, I don't think anyone would have expected that the local mutual fund industry will get 20,000 crores per month, which is the current run rate, which shows that local investors are really exuberant in equities and lukewarm towards debt.
Okay, fair point. Getting back to equities, Naren, last year your big call was telecom. Your contra buyer, and we've seen a huge rally in Bharti Airtel. Are you still playing that theme?
See, we are big believers in that theme for the next 3 years because, in my opinion, most people in this generation don't care whether they hold a purse. They are very happy as long as they have a mobile phone with them. So consequently, I believe that the mobile phone, telecom as a sector is a very good sector to own. Having said that, is the sector as cheap as it was 1 year back? Is there fear in the sector as it was 1 year back? The answer is no, because the few consolidated players people are pretty confident about. And so it's no longer a big contrarian play. Is it a structural play for the next 3 to 5 years? I seem to think so.
Okay. Unfortunately, out of time, Naren, give me a monosyllabic answer. What is the next contrarian bet?
See, I think, people tend to believe that we can create a big boom only out of consumption. My view is that I don't know whether this is a 2018 call, but I think that over the next 3 years, exports has to be a good theme, because you can't keep buying a mobile phones without an export story also. Okay. So my bet is exports led by technology and healthcare, but I'm not too sure whether it's a 1 year call or a 3 year call.
We'll take both with both hands. Thank you very much, S Naren, for joining us on what's a very special day for us. You are a very special guest.